Yes, ASEAN actually saw a pretty huge outflow last year, but that's really in line with the general outflow, leaving the emerging market in general. Okay, countries like Thailand and Indonesia actually saw outflow between 9 billion, 9 billion and 3 billion respectively. Malaysia actually saw a slightly lower outflow, around 3 billion US dollar. I guess that was partly a reflection of the rising interest rate cycle in US as well as the dollar strength in US. Okay, but going into this year, I actually think that there's a very good chance that ASEAN will see a return of foreign interest. Okay, basically, if you look at the dollar strength, dollar strength, if it is true that the interest rate cycle is going to peak in US, dollar strength will actually soften. Okay, and that will benefit the ASEAN countries, basically because foreigners will come back to this region to take advantage of the expected strength in the local currency. And also domestically, ASEAN countries are generally, in terms of the economic structure, they're more domestic oriented. So ASEAN, as compared to the North Asian countries like Korea, Taiwan, and China, they are typically less exposed to the global trade cycle. If that happens, basically interest will be revived in the domestic-oriented economies of ASEAN. Okay, if let's say, if you take Indonesia as an example, okay, Indonesia is going to see a election this year in April 2019. The last time election took place was in 2014. Okay, the country actually saw a net inflow of around 4 billion US dollar as opposed to a outflow of 1.8 billion the year before. So other things being equal, I think Indonesia could see a revival of interest from foreigners and potentially a net inflow similar to 2014. I think for Indonesia, the election will be slightly markets positive, at least in the first quarter. That's because the government is expected to prime the economy. They're expected to maintain the social spending and to maintain subsidy. Okay, and politically, Jokowi this time appears to be having a comfortable lead in the polls against its opponent, who is General Prabowo. And that is basically good for the outcome and of election, given that he is likely to stay in power. Okay, and with that, sectors like consumer, telcos, or to some extent banks will benefit. Okay, fundamentally, Indonesia does look interesting. The GDP and the inflation is expected to remain at around 5% and 3% respectively. And on top of that, the corporate earnings are expected to grow at between 12% to 13%. This is probably one of the highest in the ASEAN region. Okay, the wild card is actually the current account deficit. Now, current account deficit is dependent on, firstly, commodity prices, and secondly, the US dollar direction. Now, I guess the rupiah stability is actually key to maintain the market momentum, and I think rupiah is likely to strengthen. The dollar strength reversal, if it's indeed true that the interest rate cycle is peaking in the US. Okay, and I guess after the sell down last year, positionings in Indonesia is rather low, with the foreign interest hovering at the foreign ownership in equities hovering around 27 to 28% now, compared to the average about 33% in the last 10 years. So at the moment, we are overweight Indonesia, but one has to also be tactically positioned to take advantage of the volatility. Now for Thailand, I think it's a bit more tricky because there's a lot, probably a more probable permutations of the elections. Okay, but if there's no major surprises, we still think that the military-supported coalition is to stay in power, emerge, and possibly that will be good for the continuation of stimulus measures. Okay. Other than that, the coronation of the king is expected to take place, I think, on the 4th of May, keeping the mood of the entire nation pretty vibrant, okay? Possibly to also be supportive of consumption, given some of the household stimulus package that was announced last year. But other than that, we are rather neutral on Thailand because I feel that there's no real catalyst for the market. Valuations are trading at means with single to high digit growth in market EPS. So overall, we are neutral on Thailand. As a market, we feel that the market actually lacks real catalyst. In terms of valuations, trading at mean with a low to high single-digit EPS market growth don't look particularly attractive on a relative basis. So, but in terms of sector-wise, we like the consumption-driven sector, like the retailers. Yes. 2018 was absolutely challenging. It was very investor unfriendly. I think with that, there are both positive and negative implications for the market in 2019. On one hand, I think what the negative implications, unfortunately, is that I think that we have to continue to brace ourselves for the same level of uncertainty into this year. The key issues dragging market last year, such as the global trade war, the slowing global growth, a weaker China, are still hogging the limelight this year. Okay. Now, even with the 90-day trade truce, it is no certain that both nations could potentially come to an amicable agreement. Okay. Domestically, the ongoing policy reviews and the restructuring could bring further downside to corporate earnings. For example, telecom was affected by the cut in broadband prices last year. The Genting Group was affected by the rise in gaming tax, and the cancellation of projects and review of contracts also affected the contractors. Okay, so the good news is that after the sharp fall last year, especially in the small cap space, valuations have become a lot more appealing. One can't deny the fact that the FBM small cap index, okay, after corrected almost 34% last year, and with its forward PE trading at -1 standard deviation, as compared to the KLCI, which was still trading at about the 3-year mean, it looks particularly interesting. Moreover, with the potential of the peaking of the interest rate cycle in US and the subsequent reversal of the USD strength, I think the fund flow could become a lot more manageable, if not turning positive for Malaysia. All in all, we advocate a moderately defensive positioning, and given the current uncertainty, but also adopt an active trading stance to take advantage of the volatility. Strategy-wise, we'll adopt a barbell strategy by having a good selection of the core blue chips on one hand, and on the other hand, a good selection of value stocks. Now, value stocks refers to stocks whose valuations become more bumped up and earnings risks are relatively muted. And these stocks can be found in sectors like the technology, construction, and to an extent, oil and gas. All right. So with this in place, we believe KGF is well placed to benefit from a tactical rebound, given the exposure in the small cap sector, and at the same time maintain an overall defensive stance.